This is week 6 of my journey to become a profitable trader. And in this video, I'll be going through 2 trades that taught me 3 valuable lessons as a novice trader this week. These might just be the lessons that you need to learn to improve your trading. So let's get into it. This week we started the account at $2,546.17. And we ended it on $2,180.17. Okay, so it was another big losing week. But again, these are the weeks that we learned the biggest lessons. So Monday we were up $36.80. Tuesday we were down $237. So a big losing day there. But again, I learned so much, which we will get into very, very soon. Wednesday we were up $74.90, but we did learn some valuable lessons, or more so validated lessons in this trading session. So one of our trades that we'll be going through is actually in that day. So I'm very excited for that. And then Friday again was a massive losing day. It wasn't a very good day, which again, the second trade we'll be going through is actually on the Friday as well, because that was where we learned most of our lessons. So let's go ahead and jump into the first trade. But before we do that, I want to give you a bit of background on this trade so we can really understand the lesson that we learned here and I guess make sense of it. So the prior day on Tuesday, the market was in a 30-minute range and it was a very tight channel, okay? And if we actually pop over here, let's actually show you the channel that I'm talking about so we can really understand where I'm getting at here. So it doesn't matter which trade we're going into. Let's go on the 30-minute. All right, so as you can see here, we were in a very tight range on the 30-minute. And I traded terribly in this session. And I guess on reflections, once I was journaling the next day, I noticed that the breakout happened at New York Open. And this is something that I've kind of noticed before in my trading, but I haven't thought much of it until now. And I started to realize that, if price in my session was in a tight range, don't expect it to trade out of that range or break out of that range in my trading session. And this is because in my trading session being 6 p.m. to 9 p.m. Australian time, there's not a whole lot of volume normally in this session, right? So a lot of the time price doesn't have enough strength or volume behind it to actually break out a major resistance or support level like we see here. Now, I was actually lucky enough that the next day on the Wednesday, I was very much validated in my thoughts and my reflections on this. So that's why I chose this trade to go through, because it's very exciting to see what we learn here. So let's go ahead and go through the trade on the Wednesday. So let's zoom out for a second. We had a nice 30-minute move down here, okay, with decent volume, as you can see. And that was in New York session. So nice move down. I've marked up my 50% level. As you guys would know, that's my levels I kind of look for, but I do obviously mark up support, resistance, all that good stuff as well. So you can see here, I've marked up my level, my 50% level on a high time frame, okay? And I've got my resistance level or 30-minute resistance level marked up here. And I've got a few other levels marked up as well, but that's kind of my, I guess, focused area, okay? Now, as we pop down to the trade itself, you can see that we are in a bit of a consolidation. Now, I don't really want to focus too much on the consolidation, but what I want to focus on is this trade itself. You can see here, I entered here and I exited down here. Now, although this was a big winning trade, I actually didn't follow my take profit in this. And that's purely because it was so freaking late. I purposely stayed up to take this trade because I wanted to validate my reflections the day prior. I wanted to see, and I knew this was a perfect moment to test it because I started to get that consolidation like I saw the prior day. And I just wanted to test it for myself and to see if my reflections made sense and if they were true. And so I stayed up in this session and I played this long trade, right? And when I mean long, I mean time frame, because I wouldn't normally hold a trade this long. So we entered. Now I'll explain why we entered again. So it's 50% 30-minute level or 30-minute 50% level, and volume was dropping on the move up and spiked on this candle. So that showed to me that we could possibly see a reversal. Now as well, I do watch the tape and I started seeing a lot of buyers being absorbed at this level and some selling starting to come in. So that's why I entered here. Now my stop was above the 30-minute level and above this high here, since that was the last high, okay? Now, as you can see, I held this trade all the way down to this 30-minute level and took profit here. Now, this was at 11:30 p.m. at night, so that's ridiculously late for me. I do not normally trade that late, but as you can see, the major breakout of this level here that we were seeing on the consolidation, the major breakout actually occurred at that time, right? Between or after my session, I would say. Okay. So when obviously the volume from New York started to step in, and it's a great trade. So let's actually have a look at what I said below on my journal. I say great trade setup, entry with volume and tape to confirm, entry slightly early, but all valid signals and stop placement was correct. Exit was okay at 30-minute support due to how late it was. However, original TP was at 30-minute measured move. So I'll show you that in just a moment. Patient, obviously I wasn't very patient just because one, I got in slightly early, but also I exited early. But to be honest, that's nothing that I would have changed in this situation. It was very late and I had work the next day. So I needed to be cautious of that. I stayed up late for this trade because I want to prove my thesis from my prior session, and it worked. It was a really happy breakthrough for me to see my understanding and prediction made sense and have it validated. As a novice trader, when you don't have a mentor, getting validated like this is everything. And I think that's why people should journal, because it can help solidify some things you're thinking. As you can see, this did for me. Now, I want to actually tell you and show you where I was originally aiming for when it comes to my take profit, because that level was far from my take profit or what it should have been based on my strategy. So it's a measured move. So basically we moved the 50% that's now rejected and broke through, and we move it here. So basically moving the top from our entry. As you can see, if we were able to hold this trade, it would have been an amazing win, right? Outstanding win. Would I have been able to hold that? Probably not. One, because it was very, very late. But two, I probably, with all of this kind of chopping up here, I probably would have likely took profit here. But regardless, an amazing trade, right? I was really happy with that. I was really happy with the performance, really happy with how much profit I got out of it. 4R out of a trade, that's, you can't go wrong, right? Now, let's have a look at the second trade. So the second trade was the first trade of Thursday, and it was a losing trade. Now, there's a few things that I want to focus on with this trade, but let's go through it first so we can actually break it up. As you can see, this was the trade. Now, I entered here. I entered again up the top here, and my TP was up here, and I took a loss at around here. Now, you'll notice it was still a loss of 1R, so my original, I guess, loss if I kept my stop down here, if I didn't add. So that's why it was still a $50 loss, I guess, at that point in time. But let's go down and actually read what I say first about the trade. Trade setup okay. Price recently came off a 50% 5-minute and a high 1, high 2 above 5-minute 21 moving average with volume and tape to confirm. So that's essentially the high 1, high 2. I had tape and volume to confirm. So again, we had dropping volume, and we had a spike, okay, on the down candle. So I was expecting a move up, and as you can see, we got one. Let's have a look here. Entry was good, slightly delayed. Sometimes the tape delays. So what I mean by the tape delaying is sometimes you have the sellers be absorbed and then buyers step in, and that's how you see it. So you see like a big order get absorbed where it's like a 20 contract order be absorbed at that level, and price doesn't move down at all, and then buyers start stepping in, and that's when you would enter, right? But in some cases, you don't see that big sell order get absorbed straight away. So sometimes you'll see the move, you'll see buyers step in, and then you'll start seeing the sellers try to step in again, but price not move back down. So that's something that was a little bit different, I guess, for me on the tape on this one, which I remember. And that's why I put that in brackets there, just to remind myself. Then I said exit was terrible. I should not have added. This was out of overconfidence, and I was slightly above 5-minute level. I had an opportunity to exit based on tape and volume. So when I was up here during the trade, I do remember I had a signal to exit based on volume. So as you can see, volume was dropping. And again, we had that spike here, and on the tape you could see sellers were coming in and buyers were being absorbed, but I was too stubborn and too committed to the trade, and I didn't exit. And there's a few reasons for that. I wasn't at 2R yet, so that did kind of affect my ability to want to take the trade, but I don't think that was the right way to actually approach this trade at all. What I want to talk about in this trade, okay, is the fact that this trade caused many losing and trades that I was chasing after this trade, because I let it go from an okay profit point. Like I would have been up. Let's actually have a look at how much I was up in the trade. So if we go down here, at the highest point, I was up $83. My risk is 50. So that's not bad if I took profit there, okay? Now, the reason why I was overconfident and I added was after that breakthrough with the other trade that I just went through, where I was so happy to realize how price reacts, I guess, in my time period that I trade, that I really felt like this was like the only breakthrough that I needed and everything was going to be up from there. And of course, that's not the case. You get too confident, and that's where I was at in this session. Was I got too confident and I added right at the top, which I shouldn't have done. So that's why I added. But what is the real lesson that I learned from this trade, right? And it was that my psychology would have done better if I took the trade as break even. Because after I took that trade and took an okay win to a loss, I took loss after loss after loss, and then I finally took a basically break-even trade. And what that did for my psychology was it destroyed it. Learning that that's a trigger for me to let a decently profitable trade go to a loss. I feel as though if I had learned that lesson and knew that that triggered me to just pull it up to break even, so at least it wasn't a loss, so that didn't trigger my emotions, I wouldn't have taken 1, 2, 3 more trades just chasing that original trade just out of emotion, right? And I think this is why I want to express the importance of not focusing on just your winning trades, but focusing on the losing ones. Because if you eliminate those losing ones, and this is not the first time I've done this either, and it's only just kind of as repetition happens, I'm starting to notice my mistakes and notice my triggers and my continual triggers and my things that affect me. And maybe for someone else, this may not be a trigger for you, but it is for me. And if I know that, I can then avoid it. And hopefully, instead of losing over $200 through these 4 trades, this would have been break even. And hopefully I wouldn't have made the next 3 trades chasing it, because I would have understood and I wouldn't have triggered myself. And sometimes my mind argues with me and it says, oh, well, but what if you tapped out and then it finally goes in your direction and blah, 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 blah. Well, if that's the case, you can re-enter, right? But at least you didn't take a loss on the first trade. At least you're break even, and it's if you can re-enter. So if it does go down a little bit and it gives you another signal, valid signal, your mind is going to be in a more healthy place to actually re-enter that trade and give it another shot. And most of the time, you'll be in a more optimal level anyways for even more profit out of that trade. So it's a win-win. So that is not an excuse. So don't let yourselves, I guess, convince yourself on that like I did, because I have many times before. But there's a second lesson that I actually want to discuss about this trade. This session, I just had like the bias of long, mostly because I was also triggered by that first trade. But I want to talk about the bigger picture. In some cases, I just don't really focus on the bigger picture often enough. And if we zoom out, you can see here, which I've marked up after the fact as I've been journaling, is that it was also a 30-minute 50% level, okay? So I would not have added there if I knew it was there. But sometimes when I come to my trading session, and this often happens when I start getting a bit closer to the end of the week where I'm a little bit more tired, less patient, etc. What I did in this session was I was like, great, I got my 50%, was like, yeah, cool, we've got a leg up on the 30-minute, mark that up, we're good to go, we've got the 50% here, perfect, we've bounced off that and away we go. And I marked up my 30-minute levels and all of that, but I didn't really consider the full picture. So when we zoom out, which I should have done and considered the full picture, you can see that one price is trending, which I did consider that. Obviously I put a trend line here, but I didn't consider my strategy in the sense how I trade it on a trend perspective. So when I understand that price is trending, what I'll do is you can see I'll mark up, on the nice leg like I did that prior day. You can see it hits the 50 and then continues. And when it breaks, you expect it to go to a measured move. So if you move it down here, again, it went to the measured move. We know that. But then you go, okay, will it go up to the 50% level? Now, in this case, 50% level should be marked from the last pullback before the break. So this was the pullback and then it really broke down, okay? So that's where it would be marked up to, and it would be marked up because we've learned on previous sessions that if there's a larger wick on the higher time frame, you mark from the lowest point, which we do. We then understand that this is actually a 50% zone. If I took more time to understand the bigger picture clearly, I would have had a more accurate bias on my direction on the day. And I think as novice traders, we can all admit that sometimes we jump on and we're so narrow-minded and we just want to get in and trade and whatever else. And sometimes we just forget to look at the big picture and slow down right at the beginning to really grasp the idea. It's like reading a book. You want to get a vibe, right? And you can't do that without reading a couple of pages. You don't read one page and go, oh my God, I love the book, right? So that's what I need to do and do more of. So that was the second lesson for this trade, and I will be taking that into next week. So that's the lessons I learned for the week. Number 1 is understanding the bigger picture, which will also help you understand, number 2, your limitations to your session. So for me, between 6 and 9 Australia time, I understand that volume is slightly less during this time because it's right before New York. So if we're consolidating, understand that we're unlikely to go ahead and break out of that zone. So just trade off those strong resistance and support levels and take short risk off trades in that trading session because you understand where you're at and the limitations with your session you trade. Number 3 is understanding your triggers, avoiding that trigger. So if you understand that you don't like giving away profit, pull it up to break even, because yes, it may not be a trade that's a winning trade, but what you can do is then go on to the next trade without having that emotion and that triggered emotion affecting the rest of the day. Could you imagine if every time I've done that, it's lost me about $200 like I did there? At the moment, I'm down about $700 on this account. I would easily get rid of those losses just by fixing this one mistake. So that is going to be my focus for next week. If you guys enjoy these videos, please leave a like and comment down below. I love to hear from you guys and share what we think about strategies. And if you do like TradeZella and you want to try it out for yourself as well, as this is my journaling platform that I love to use and it's so helpful and it makes journaling so easy, click the link below, use the code NOVICE10 to get 10% off your first year. Otherwise, I'll see you next week. Thanks. Bye.